Hello everyone, this is Harvey from Black Forex Traders. Welcome to our YouTube channel. So in this video I'll be showing you how to analyze the market from higher time frame to lower time frame. So I'm gonna use USD as an example. So the first thing you see here, you're wondering why I drew these two lines here. So I'm just gonna explain them because they represent a value here, because this is my supply, so my demand zone here. So I drew this lines from H1 time frame. So let me explain why I draw these two lines here. Let me go back. As you can see, this was our last low on daily. If you spotted that, even on H1 time frame, you can see this is our last low, which is way too low than this one's inside. So if I can zoom it out, you will see that we have a base here. A base is some sort of a consolidation, or okay, as you can see, I had this consolidation part here, so I didn't calculate on these pins here, because these pins, they just use them to hit the stops, and then this is where the market was playing. As you can see, they went up and down until they broke the base on the upper side. They give us a rally. So I used this base to anticipate the rejection point on daily time frame. As you can see, the market was dropping, as you can see, going up and down, but they were going closely to my base, which is this one, my demand zone. As you see, they did really reach this point here. So once they reach this point, I waited, or you could wait for what? A rejection candlestick, which we got, which is this candlestick here, which represents what? A rejection point, giving us an RR. So we have a confluence of levels here. The first one is the demand zone, the second one is the candlestick pattern, and if you draw your resistance and support lines, or the trend lines, you'll see you have more confluence levels, making this level very strong. As you can see, we have this. Let me take something I can use to draw. We have this touch, this one, so we had multiple touches on this trend line here. So this was our last touch, which gives us what? The first confluence is the trend line, the second one is the demand level, and the third one is the pattern, the candlestick pattern, which is the RR here. So once you get this RR, now you have the market bias, that the market is doing what? It's gonna buy. Understand? So once you get this, then you're gonna go to smaller time frame and start looking for entry points. As you can see, your target will be the resistance line, which is this trend line here. This is where you anticipate that the market will touch this line, then they will reverse. As you see, they reversed, but they didn't come to the previous low. They just reversed in the middle. Then as you can see, they give us something like a consolidation part here. And then if we go to small time frame, this is going to be something like a channel like this. As you can see, they did this channel and then they broke it on the upper side. They also broke the trend line here, and then they went up. So once they do something like this, they give us a momentum like this, you don't counter trend. You're going to wait for them to come back and give you a retest after a breakout. As you can see, they came again, they give us a retest here, then they went up again. As you see, they made a small pullback again, then they continue going up. So from this point here, you had your bias that the market is going up. Understand? So all you had to do is look for buy opportunities. So let me clean this. I'm gonna go to smaller time frame and look for those buy opportunities and give you reasons to why you could have taken those entries. Let me just anticipate this one. Okay, this is this one. Let's go to H1 time frame. As you can see, this is our descending channel here, the bigger channel. As you can see, this is where the market reverses. This is that RR that we had on the daily time frame. As you can see, this was a very beautiful W formation with a flip zone here. The flip zone, I'm talking about something like this. They will give you a W, and then they will go up again and try to challenge the nadir or the apex of a W, and then they go up. So this is the flip zone, or this is what I call it. So if you look at this, we had this W. You see we had a W, then they went up, and then they came again to challenge the previous high, which is this one inside the W, and then they continue going up. So this was a very beautiful entry point on the H1 time frame. Then as you can see, they did really went up, so your target will be around this point here. As you see, they didn't really reach that point. They started to consolidate. As you can see, you can also spot this channel on H1 time frame. As you can see, this is more like a continuation pattern here. As you can see, they went up and down, up and down. You remember on daily time frame, you had a bias that the market is going up. So it means all you're looking for is buy opportunities. As you can see, or if you didn't buy around this point, you can see we had like 3 touches again. We had this touch. Okay. We had this touch, this one, and then this was a 3rd touch. As you can see, they gave us a W. So this was a very pretty simple W. As you can see, you had your channel here. So you were like, if you saw this, you would have taken the buy around this point. Then your take profit point will be this trend line here. So once you see they reach this trend line, you can see they were in a channel. So you would expect them to come to this point, but eventually they must break on the upper side or on the lower side to challenge this low and then continue going up. You see, they did what? They just broke the upper trend line here, and then they went to break the previous high, and they tested on the measured trend line from daily time frame. So as you can see, they gave us a small consolidation part here, and then they gave us a false move, and then they continue going up, and they broke the trend line here. So remember, you are in a bias direction, so you don't look for sell opportunities. As you can see, they broke, so we expect them to break it and come and retest, and then they continue going up. But we didn't really get that. They just continue rolling up. They just rallied up, rallied up. Let me reduce this green. So as you can see, they went up, and then they gave us something like a head and shoulder here. So this was the turning point here, the head and shoulder. So you expect them to come and challenge the previous high, which is this one, which because this one is no longer our high because it's broken. So this is more like our new high, which failed also. So this is our trend line. So we expect them to come and challenge this trend line here. But as you can see, let me take the okay. As you can see, this is where we expect them to come. As you can see, they came close to the trend line here, but they didn't touch it. So if you used the Fibonacci, use the previous low, which is this one. We're not gonna use this one. We're gonna use this new one here. You can see that we have this. Then we're gonna use the new high from the head and shoulder. Then you can see that you have a confluence of levels here. You have your trend line from the broken point, which is this one. Then you have what, the 61.8 level from the Fibonacci. Then also, if you look closely, you have this movement, this low and this low, they connect like this. So this was our third touch here. So we had this touch. Sorry. Let me do it like this. we had this touch, this second touch, so this is our third touch here. So we have 3 confidence that gives you that this level is very strong. As you can see, they gave us an inverted head and shoulder here, and then the entry will be somewhere around this point at the neckline, then the stop loss will be here. Then you take them out, then your take profit point will be the previous head and shoulder, meaning somewhere around this point. As you can see, once they hit your take profit point, they did what they give us an information. So once you get an information like this, then you know, okay, I have my trend line here. Then you're gonna just adjust it like this. As you can see, we have your trend line. So you would expect them to do what? To touch your trend line, and then they continue going up. So the other thing that you can do is use a Fibonacci. Let me start by deleting this so that we can see clearly. You can use the Fibonacci using the new low, which is this one. You're going to use this new low and the new high from the information. As you can see, they reversed between the 61.8 level and the 78 level here. So they give us a beautiful W here, plus what? A flip zone. So they give us the pattern that I just spoke about, which is something like this. As you can see, this is the flip zone level here. So if you look closely here, you can see that they broke the nadir of the W, then they went up and they came again, they retested exactly on the 61.8 level. So they, after that, they do what? They just went up. So this is how you look for buy opportunities after you found that you have a what? A buyer's direction or a buy direction on daily time frame. Then you just scale down to smaller time frame, then you start looking for buy opportunities. So in this trend, you would have taken like 1, 2, 3 trades, and all of them would have won because you'll stay with your buyers from daily time frame. Then you will continue looking for buy opportunities. You had a W formation here, you have an inverted head and shoulder here, then you have a W with a flip zone here. So this was beautiful trades. So even if you could have spotted this sell opportunities, you could have taken them, meaning that your trade profit point you will use this trend line here, because you'll be going against the trend, so you can't hold them forever. So once they reach this point, then you take your profit, just like this one. You take your profit, then you look for buy opportunities, continue trading, going up and up and up. So this is how I analyze my market from higher time frame to lower time frame. I use daily time frame or weekly to look for my weekly buyers. Then from there, I start to scale down to H1, 15 minutes, 30 minutes. Then I start to look for my buy opportunities. Once I get them, then I take my interest. So I hope this helps you guys. So hit the subscribe button so that in the future you don't miss everything that I post. So thank you.